You don't need thousands of dollars to start investing. You don't even need hundreds. In this video, I'm going to walk you through exactly how to invest your first $100, step by step, from opening an account to buying your first investment. No jargon, no complexity, just a clear path to getting started today. Only 58% of Americans own any stocks at all. That means 42% of the population is completely sitting out of the greatest wealth-building machine in history. The stock market has created more millionaires than any other asset class, and the barrier to entry has never been lower. You can start with literally $1 at some brokerages. First, you need a brokerage account. Think of it as a bank account, but for investments. The top options for beginners in 2026 are Fidelity, Schwab, and Vanguard for long-term investors. All three offer zero commission trades and no account minimums. If you want a slick mobile app, Fidelity's interface is excellent. Opening an account takes about 10 minutes online, and you just need your social security number and a bank account to link. You'll be asked what type of account to open. For most beginners, start with a Roth IRA if you have earned income. Your investments grow tax-free, which is a massive advantage over decades. If you've already maxed out your Roth or want more flexibility, open a regular taxable brokerage account. Avoid anything complicated like margin accounts or options trading. Keep it simple. With $100, buy a single broad market ETF. My top pick for beginners is VTI, the Vanguard Total Stock Market ETF. It holds over 4,000 stocks, giving you instant diversification across the entire U.S. market. The expense ratio is 0.03%, which means you pay 30 cents per year for every $1,000 invested. Search the ticker VTI, select buy, and enter $100. If one share of an ETF costs more than your $100, don't worry. Most brokerages now offer fractional shares. This means you can buy a fraction of a share for any dollar amount. If VTI is trading at $250 per share, your $100 buys 0.4 shares. You still get the exact same percentage returns as someone who owns 1,000 shares. Here's where the magic happens. Set up an automatic monthly investment. Even if it's just $50 or $100 per month, the consistency matters far more than the amount. This strategy is called dollar cost averaging, and it means you buy more shares when prices are low and fewer when prices are high. Over time, this smooths out the volatility and removes the stress of trying to time the market. $100 a month invested in a total market index fund, earning the historical average return of about 10%, grows to over $226,000 in 30 years. You would have contributed only $36,000 of that. The rest, $190,000, is pure compound growth. Starting small and staying consistent is the entire game. 3 things to avoid. First, don't check your portfolio every day. Market fluctuations are normal and will stress you out for no reason. Second, don't sell when the market drops. Downturns are when you're buying at a discount. Third, don't chase individual stocks or crypto tips from social media. Stick with broad index funds until you have a solid foundation and understand what you're doing. That's everything you need to know to invest your first $100. The hardest part is starting, and you now have zero excuses. Subscribe for weekly 5-minute finance lessons, and watch my compound interest video next to see how that $100 can grow into a fortune.